Let's get started. So I think I know almost everyone here, but if not, my name is Natasha Phipps, and I'm joined tonight by my managing team partner, Andrea Tessier, and the rest of the Phipps Real Estate Group team who are going to get to speak tonight as well. So we'll introduce them as we go through the evening. And we like to do these events to, number one, connect with you guys, but also provide kind of as much insights as we can into what's happening here in Calgary and Alberta. I know a lot of our clients, a lot of our database are not necessarily from the Calgary market, but it's also good to hear what we're feeling every day out in the marketplace. So we do these about once a month, every quarter. We also try to do an in-person event here in Calgary. The goal to really be just providing value back to you guys. If you ever have any ideas of what might be valuable, we would love to hear them. But this evening, our topic is going to be around what's the latest on the Calgary real estate market, as well as some insights into the peripheral markets. So we're seeing a lot of activity kind of in the surrounding areas as well. So we wanted to mention that in terms of what opportunities might be there. And just as a refresher, the Phipps Real Estate Group team, we do residential real estate, commercial real estate, and property management services here on our team. So we do it all. We work with investors. We work with regular buyers and sellers as well. I would say more than half of our business is probably investor focused, but there's still a significant amount of our business that is not. And I've always felt that the investment knowledge, even for a primary residence, is really valuable. So we take that kind of approach with everything that we do. We are trusted partners of Keyspire, Rain, and Savvy Investor, which is many of these groups is where we have met many of you amazing people. And so yeah, I think if you want to learn more about us, please reach out. You can go to our website, phippsgroup.ca, as well as we have a Facebook group called Calgary Real Estate Investing. So if you're not in the Facebook group, feel free to pop on there as well. We post all about our events and some opportunities, and it's a good place to ask questions as well. So if you're not in there, I recommend you do so. But let's kind of get started, and Andrea's gonna take it away, I think.
Yeah. Okay. I'm just going to pin myself on here. All right. So this is me. For anyone who doesn't know me, again, my name is Andrea, team managing partner and investment focused realtor with Phipps Group, and my contact information is up there, but we'll have some general contact information for the team at the end as well. So I'm going to be going over just a general market update in the residential sector to kind of type what's been going on over the past month, as well as sharing some insight into what came out with the forecast and looking ahead for 2025. So these are the most recent market stats released from the Calgary Real Estate Board. And this is the same thing that's kind of released every month, but there's a couple of things I really want to highlight that we saw in January of this year. So starting out with benchmark price, of course, that is benchmark price. It's important to understand what that actually means. It's the average property type in Calgary. So, if the average property type might be like a two-story property, this is what the price we saw as the benchmark in January was. So this has remained relatively stable over the past couple of months, which is, fairly normal for the seasonality in winter. But it is still increased from last January. So 2.8% increase we saw year over year from January 2024. Sales in January were down. Sorry, excuse me. And then new listings were up quite a bit. We saw quite a few new listings coming onto that market, and that's what's resulted in quite a significant inventory increase in January. So almost 70% up year over year. So while that is quite significant, it is still lower than long-term trends. Typically, long-term in January, we see above 4,000 units of inventory. So we're moving away from the extreme seller's market that we saw for much of last year, at least for the first part of last year, and moving into more balanced conditions. So when we're looking at months of supply here, that number is telling us, with the current inventory that's on the market, if it was selling at the same absorption rate, then how many months would it take for all of that inventory to sell out? So anything below 2 months of supply is considered a strong seller's market. between 2 to 4 months, we're looking more in balanced conditions. And then anything above 4 months is a buyer's market. So that's an important stat that you want to be looking at each month. So right now we're just pushing above the seller's market into more balanced conditions here. Along with that, we're starting to see days on market increase a little bit, some properties sitting a little bit longer. It is important to note with this inventory increase that we saw, it's not equal across all property types. And I'm going to be talking about that in the next slide. But a lot of this was actually driven by the condo market. We saw quite a big increase in January in inventory for apartment style properties, especially those that are in higher price ranges. So we've been talking about this through our socials and with clients over the past couple of months, but really in the Calgary market right now, it's important that we're looking at property type and area and not just the general, because there's some different diverging trends and things that are going on. So we're going to dive into property type and within that talk a little bit about areas as well. So within detached properties over the past month, we're continuing to see supply gains and homes priced above 600,000. And, I think that definitely still makes sense in terms of affordability. The lower price points, of course, are what are in demand, but there just isn't a lot of supply in that area because of prices increasing over the past several years in our city. So we've seen more and more inventory coming on above that 600,000. And we particularly have seen more balanced conditions taking shape in the city center, as well in the Northeast district. And the Northeast district in particular, we saw really increased prices or a lot of price gain over the past year. So things are starting to balance and level out a little bit there. In the semi-detached sector, we've seen quite a bit of variation. So the city center, Northeast and West districts are pushing above 3 months of supply. So definitely in the more balanced territory and starting to push maybe even towards a bit more buyer's conditions, whereas all other districts are still below that 2 months, which is seller's market. So again, really important that we're looking at specific area. For row type townhouse properties, the inventory has increased a little bit from what we saw from last year, and we're just seeing more consistent inventory with long-term trends. The largest monthly adjustment we saw for January occurred again in the Northeast district. And then for apartment style listings, sales have remained relatively strong, but we've seen a significant gain in supply. And a big part of that, I think, has been new construction. We're seeing quite a bit of new construction coming on for apartment style product. The inventory levels are much higher than we've seen over the past 3 years, but really nowhere near that 9 months of inventory that was reported prior to the pandemic. The largest price adjustments we saw were in the Northwest and South districts for particularly apartment style properties. So again, just really important that when we're looking at any type of property, we're being specific to area, to property type, because there is quite a bit of variation that we're seeing. So looking ahead for 2025, again, as we mentioned, the CRED forecast was released in January. So some of the main points that we saw and that we're expecting, we are continuing to expect that there's going to be quite a bit of housing demand, and that's going to be due to easing lending rates and continued population and employment gains in our city, which is definitely very positive still. We've seen a lot of strong interprovincial and international migration into Alberta and into Calgary in general. We're still seeing that, but it's, I would say, slowing, and we're not expecting it to be at the same intense rate that we've seen over the past 2 years. And we're seeing more inventory and increased competition from new home construction. And then, of course, we're seeing a little bit of heightened economic uncertainty. So those factors, we're not expecting to see a giant dip. I think, when we're hearing some things in the media, everyone's thinking doom and gloom. I don't think that's going to be the case. I think it's moderating a growth. And again, moving away from the really extreme seller's conditions we saw in last year's market. So looking ahead for kind of annual price growth, what was reported or expected, we're expecting this year is a price gain of around 3%, which is pretty kind of typical on annual. Usually when we're looking on our performance, we'll put, between 3 to 4% long-term trends. That's usually what we're seeing in the city. Of course, over the past couple of years, that was exceptional. And we saw, double digits in terms of price gains, but again, we're moving towards those more balanced conditions. And then we're going to continue, I think, to see variations in price growth across different market segments. And then again, that competition from new homes. So I think a big part of that, we're seeing a lot Calgary has so much urban sprawl and a lot of growth in these new communities. Lots of new construction is happening in the suburbs. So when we're looking at different types of projects, we definitely want to be strategic here in terms of where we're focusing. All right. So that's all I had for the general overview. So of course, if you have questions along the way, don't hesitate to put them in the chat or unmute yourself, but we'll also have some time at the end additionally. We're going to dive into a couple of the different periphery areas now to talk about and highlight them, and then also some specific opportunities that we do have available. So I'm going to pass it on to our team member, Heather.
Hello, everyone. I'm Heather. I'm going to be talking to you about a community that's quite unique, and it's called Harmony, and it's actually where I live. So Harmony is an award-winning master planned community. It's 8 minutes west of Calgary, and it's about 30 minutes from the Rocky Mountains and from Canmore. Right now, there's about 1,600 plus residents. So there's just over 600 homes built, 777 with the permits being pulled. But at max, we're going to cap out at 4,500 homes, which is approximately 12,000 people. So we're still very much in our infancy. And with Harmony, at the very beginning, it was very much a higher end estate home, lakefront living. But now we're seeing the next set of phases in Harmony. They're bringing in smaller lots, smaller homes, more affordable starter homes, and certain builders are offering legal basement suites. So that is something that is so exciting for Harmony. So just to keep in mind, we're still very much a very unique community. So if you think about Calgary has about 10 homes per acre, and even with our new phases having more um, density, we are going to have about 2.6 homes per acre. That's a huge difference. Some of that is because Harmony has 600 acres of um, designated green space. We have 25 kilometers of walking trails. Harmony is the home of the Mickelson National Golf Course, which just went private for this summer. We're also getting Base Camp Nordic Spa. So if you haven't heard of Base Camp, look them up. They're doing a Nordic Spa in Canmore. They have lots of hotels. They're also building the Harmony Nordic Spa, one in Fernie, and they're looking at an option to build in Banff. So we're lucky enough that they're coming to our little community and they're going to be part of the huge village center. So right now, we are in such a great state to try to buy before everything comes because right now it's hard to buy milk here. But we can see the long-term future of what's coming. So they've already broke ground for the village center, for the Nordic Spa, deep servicing and roadways went in last year. They're supposed to be starting this spring. So that's going to bring our restaurants. It's going to bring the Nordic Spa. It's going to bring villa style lakefront properties. So that's really exciting to be here before that. They're also Bingham Crossing, which is just outside of Harmony. It is going to finally move forward. It's been saying it's going to move forward for quite a few years, but Costco is going to be their large anchor tenant, and they are supposed to be opening in the fall of 2026. So anytime you have a Costco or
Lord,
a
finish my tea.
Starbucks, pardon? Anytime you have a Starbucks or a Costco coming near you, you know it's a good area to invest. I wanted to talk to you about why it's a great place to invest as well. Harmony does not have very many rental properties. Mostly everyone moving here is building, but most people that are building here, they want to move here while their house is being built. So you see a lot of people looking for rentals in our area so that their kids can already start at the top ranked schools in Springbank and they can start enjoying being a private member at Mickelson if they want, or enjoying the lake. The other part that we'll need a lot of rentals for is once the Nordic Spa is up and all of our other village center and the Mickelson golf course, we need employees and employees need places to live. Bingham Crossing, they'll also need places to rent. So that's the second opportunity of why we feel Harmony is a great place to invest. The third thing is with the high-end Nordic Spa and Mickelson, they host high-end golf tournaments, and they're always sending out emails to us in Harmony asking if we'll billet people that are in these tournaments because we just have no places for people to stay or rent yet. Some of the homeowners that are building in Harmony actually rent hotel rooms in Calgary for 3 months until they can get in. So I know that rents here, you can go anywhere from a one bedroom, about 1,200, to you can charge $5,000 a month for a four-bedroom home. And there's lots of demand for it. Some people want a short-term rental, they want 3 months, and lots of people are willing to lock in for about 2 years while their house is being built. If you want to go to the map, so I just want to show you, this is the plan for Harmony. So only the red is sold right now. The blues are coming soon. So if you look at all those other areas of Harmony, that's still to come. So you're really getting into the infancy. If you look on the right, I don't know if you can see it, it says Lake A. That's our current lake. It's about 40 acres. Lake B is they're building it right now, and it's going to be 100 acres. So we're going to have 140 acres worth of lake, and anywhere that you see green is designated for commercial. So you'll see the village center, that's where the spa is going to go, but there's so much more to come. So it just makes it a great place to get in now, like they say, invest long term because it's only going to keep going up and up. The other thing I want to say is, what was it? Yeah, I think actually I got everything. So I just wanted to say I fully believe in Harmony. Obviously, I live here. I actually own an investment property here as well. So I kind of live here, work here, invest here, and believe in it. I've went around to a couple of the builders, and they've given us some of these opportunities. So in certain phases, you're able to get into a single family starter home for around 650, and this includes your lot and GST. If you wanted to develop the basement with the builder, it's about 30,000. If you wanted it to be a legal suite, it would be about 70,000. Another product is the duplexes. These are a bit bigger, 1,700 to 1,800 square feet. They're already under construction, so there is a little bit of a timeline here as far as if you still wanted to make any selections. These are 670,000 to 750. It includes your lot and GST and an undeveloped basement. Some will give you the option for legal suites being roughed in. And then we have townhomes. We will have some townhomes that are going to be condo style, but currently right now they're building townhomes that are freehold. We already have some, and they're snapped up the minute they come on the market. But basically, they're 3 bedrooms with a detached garage starting at 675, or you could do a 3 bedroom with an attached garage for 738. And then basements are approximately 50,000 to do the basement. Now, the one thing about the townhomes, they do actually have some corner lots that are a little bit higher price point, but they give you a triple car garage and a massive lot. So that's also something, if you want more information, you can reach out. And as I mentioned before, we have really strong rental rates here because people that are building their forever homes, their dream homes, they want to live here instantly. And some of the estate homes do take up to 2 years to be built.
Awesome.
Wonderful. I know there was a general question about rental rates and amounts. So, I mean, if someone's wanting to look at rental rates, a really good platform, I mean, I think one of the major platforms used in Alberta is Rent Faster. So, of course, take a look on there. There's a really great market stat tool that's free on there. So you can look at any community property type and see what the average rents are, how long listings have been up, and take a look to verify some of the information as well in terms of rentals rates.
I just wanted to point out as well, this evening we're highlighting some opportunities and kind of thoughts outside of what you might initially think of. So there's a couple questions like people who golf don't typically rent and like those are good points, but I think sometimes also we can get fixated on what we think, people might want or assume what is out there. And I'm really quite impressed with what Harmony is doing. And I agree with you. That was sort of my initial instinct as well. And then listening to Heather's experience as a landlord and the demand she had on her, brand new rental property and the length of time a lot of these applications were willing to sign a lease was really interesting as well. So, I think one thing I've learned in real estate investing over the years is to try to pivot and adapt where people are not necessarily thinking, and generally you will have the potential for greater results because when everyone is running this way, often the opportunity is over here, and this is a really great example of that. So thanks, Heather. That was awesome.
Natasha, may I say one more thing? I was just reading one of the comments. So, a lot of the people that I know that do build investment properties out here, they don't even have keys. They're about 3 or 4 months away from getting possession of it, and they've already locked down their tenants. It's that there's so many people in desperation to rent out here. We can put our names at the Discovery Center if we have a rental coming up, but it's such a unique idea. And I get what you're saying about rent, or like golfers maybe don't rent, but golf tournaments, we have really high-end golf tournaments that come and they actually will bill it with people because they have nowhere to stay. And we have to think about the people that are going to work in Harmony eventually. They are going to need places to rent.
Absolutely.
Yeah. There's a couple more questions in here. So is Costco coming for sure? So I was just looking on the Bingham Crossing website. There are some updates. It does say that they have received their development permit for Costco. So definitely positive there that things are moving forward for development. What else are we seeing in there? I think there was one other question related to some of this. Is the duplex price for the whole building or for one unit? So that would be for one side of the duplex, half duplex. And then are the single family homes bungalow or two-story? I believe there's probably options for
Two-story.
both. Okay, two-story.
Well, actually, you know what? There is some bungalows, and there actually is some walkout lots available too. They'd be a little bit more. I tried to find kind of your starting point, but there are walkout lots available for some of the homes as well.
Oh, short-term rentals. Heather, is there any restrictions on short-term rentals out there?
So that's a good question. Rocky View right now is looking into what they're going to do. We're such a unique community that they haven't really done anything yet. So they have to figure out what they're going to do. Right now, people do it. Um, yeah. And I think with the spa and everything going forward, I mean, I can't guess, but right now there's no rules against it.
Right.
Um,
That's always the way with short-term rentals. It's like it's okay now. But I have seen there's like some carriage house listings out there that people have that they're operating as short-term rentals. And oh, Darcy asked, are there local property management companies in the area? I mean, Harmony's not so far that a Calgary like we would manage long-term rentals out there for sure. So I don't think you'd have a problem with that, Darcy.
Mhm.
Most, not all,
Go
but I
ahead.
would say most property companies would.
Um, Cara was asking any changes in the rental market. I don't know if we actually have Una here with us this evening, our property manager, but in general, I'd say the rental market, from what we've seen in talking with our property manager, Una, is following the resale market in that we're seeing things balance out a little bit in terms of rent. Similarly, so.
I mean, people do want to live near amenities. I would definitely argue that people like amenities and lifestyle more and more than we've ever seen. Um, Even large like rent purpose rental developers are focused on amenities more than they ever have been. Co-working spaces. I think there's going to be a co-working facility out there, I heard, and things that are, able to enhance lifestyle, wellness, all of those things are much more apparent and desired. It doesn't matter if it's a tenant or a homeowner. Those are things that are becoming more and more popular. So I would disagree with the type of tenant that you're going to actually be attracting out there. All of these are going to be draws to the area. So there's all kinds of different tenants out there, I guess is what I'm saying. But
One more thing I
yeah,
could say about that too is we have a private school just outside Harmony, and so there are no dorms for them. So a lot of families will come in and rent in Harmony if they can get in because their child is going to school there and they don't want to billet them out. Even my renter, he's high up oil and gas, and his daughter's going to the Edge. So he wants to be in the community while she's in high school there, but he doesn't want to buy until he knows if he likes the community.
Yeah, that's
sure.
thanks so much,
Awesome.
Heather. Okay, we
Well
are gonna,
done.
yes, that was excellent. We're gonna hand things over to our team member, Erin, next.
Hello, everyone. Okay, so I'm Erin, and today I'm excited to share with you why Cochrane is quickly becoming one of the top investment opportunities in Alberta. So let's dig in. So Cochrane is currently experiencing rapid growth, and for good reason. So from 2016 to 2021, it was the fastest growing community in Alberta with a 24.5% increase in population. That's a clear sign that people are flocking to Cochrane for its incredible living experience. As of January 2025, the benchmark price for homes in Cochrane is 565,000, which is a 5% year-over-year increase. This shows that Cochrane's housing market is growing steadily and continues to appreciate, which is great. We all want to see that. So in terms of the housing market, the majority of properties are single-family homes priced between 400,000 and 700,000, making them ideal for families and professionals looking for a suburban escape with easy access to urban amenities. The demand for rental properties is strong, and with low supply and a growing population, this is a perfect market for generating passive income. So now, why would you invest in Cochrane? Well, strategic location. Cochrane offers the best of both worlds as a small town charm with the convenience of nearby urban centers. Calgary is really not that far from Cochrane. We're about 20 minutes to the city limits from Cochrane, and it's like a quick drive to Cochrane, I think, or sorry, Canmore. I think it's about like a 45-minute drive, depending on the route that you take. Diverse investment options. So whether you're interested in rentals, pre-construction homes, or new developments, Cochrane offers a variety of investment choices and growing infrastructure and economy. As the town continues to grow, it ensures future-proof investment potential. And a very fun fact is that Cochrane residents are affectionately called Cochranites. I thought that was cute to add in there.
And they have the best ice cream
They
shop.
do. So going over the rental market breakdown. So, which is a key reason why Cochrane is such an attractive investment opportunity. The average rent in Cochrane is around $1,400 per month, but it really can range from about $1,000 to $2,100, depending on the size and type of property. As you can see, there's a breakdown by unit type, so ranging from bachelor units to 3-bedroom units, quite the range of price. A standout feature in the Cochrane rental market is the low vacancy rate, sitting at 5.4%. This indicates that there is strong demand and limited supply, making it a great opportunity for investors looking for consistent rental income. I think the key takeaway to take here is the rental market in Cochrane is thriving, making it an excellent area for investment. Next slide. So we're going to talk about municipal regulations and the value of a legally suited secondary suite. So while Cochrane is an amazing place to invest, it's important to understand and know the municipal regulations, particularly when it comes to secondary suites. So unlike Calgary, Cochrane has stricter rules regarding secondary suites. Each property is only allowed one accessory suite, and there are specific parking requirements. For a studio or one bedroom unit, one extra on-site stall is required. So that would mean that if you had a basement suite and you had somebody living upstairs, 3 total parking stalls are required. For anything 2+ bedroom unit, you would require 2 extra on-site stalls. So again, totaling 4 parking stalls. These stricter regulations mean that legally suited secondary suites are more rare and therefore more valuable in Cochrane because there's not a lot of them. So, on that note, we here at the Phipps Group are working on an exciting and exclusive opportunity in Cochrane. We're collaborating with a builder on a builder that's like one of the few in Cochrane that we know of that's offering legally suited secondary suites. So once we get more of the details ironed out, we'll be letting you guys all know. So stay tuned. And so yeah, Cochrane is an emerging market with strong potential for growth and a booming rental market, and of course, a unique investment opportunities. The demand for rental properties, along with limited availability of legally suited secondary suites, makes this a market you won't want to miss. Thank you for your time.
Awesome. Thanks, Erin.
Awesome.
One thing I wanted to add there for the parking, yeah, so that does differ from Calgary. So in Calgary, you need to have 2 off-street parking stalls. So there has to be one designated for upper unit and one for basement suite. Doesn't matter on how many bedrooms the suites are. Cochrane will allow tandem parking, so that can apply. But I think one thing to consider with that is just sometimes your lot size and if things can fit and how that plays into the yard. But in Calgary, that you can't have tandem parking. You have to be 2 individual side-by-side stalls. So that is something that helps a little bit, but definitely they're less common. I have a rental property that I own in Cochrane, and just like Erin was saying, our tenants upstairs work in Canmore because the cost of living in Canmore is way higher. They were renting like a studio above a garage for more than the rent they're paying now for a 1 bedroom basement suite. But we're still, charging very strong rents. I would say very close to what we're charging in Calgary, if not the same in some scenarios. And it's very family friendly. Our tenants in our upper unit are a young family and love that kind of small town feel that Erin was saying, that small town feel, but lots of people commute and work in downtown Calgary also. So you kind of get the best of both worlds there.
Yeah. And they'll use like the Tuscany train station, which is like literally at the outskirts of the city, to commute downtown. I think to commute from Cochrane to inner city Calgary, it's actually a 30-minute drive. So it's not too bad.
Yeah.
It kind of reminds me of so secondary suites are super common now in Calgary, of course, but this kind of like there's huge demand for suites, but the town of Cochrane is, controlling the amount of development that happens, which is understandable, but that's kind of what, rings bells of opportunity in my mind. And so we have been kind of trying for years to get builders to want to essentially go through the permitting process with the town. And back in 2018, it was the same thing in Calgary. So fast forward 5 years, I think this is going to be a very different conversation. But in 2018 in Calgary, I believe I was the only person going around to every builder with an idea of a basement suite. And Morrison Homes took my crazy idea and we did dozens of them. I think this will be a scenario where hopefully it'll take one sort of builder to kind of figure it out with them. And hopefully we'll have more opportunity. But like most things, it's better to be kind of at the forefront of things than following the herd in 5 years. So I'm really excited about this. I think, Cochrane has a lot going for it for all the reasons Erin just chatted about. But we did have one kind of batch of suited properties that I had the fortune to help sell in Landmark in Sunset Ridge in 2018. And we kind of did a whole street of them. And to my knowledge, all those investors still have those properties and they have had an excellent time managing them and are, just been chugging along as long-term buy and hold properties. And then just this year too, Danny and I had the fortune of selling a multifamily building in Cochrane as well. And the one thing too is like I think from our understanding of meeting all the tenants there, and it's like people stay. People are kind of putting down roots. They're staying for a while, and so you get a good kind of tenant demographic who wants to stay. They want to, call this town their home. They like the kind of smaller town feel, even though it's becoming a larger center. They just did a major, or they're doing a major infrastructure upgrade in terms of the highways intersecting. And if you've driven through Cochrane lately, it's a bit of a mess right now, but those infrastructure upgrades should signal opportunity. That means there's planning, there's development coming, they are planning for population, and that's always a good sign, like to be investing where things are being improved around your property for you. So we do not have the exact final pricing from this builder. We've been working with them for the last couple of weeks on it. We're hoping to have it for this evening, but it's pretty comparable to Calgary in terms of pricing, to be honest with you. And it'll be for a semi-detached property with a legal suite. You'll be in the kind of 675, 680. That will come with an attached front double garage as well. So that's the rough pricing. So it's not necessarily cheaper now to go to Cochrane. But I do think the kind of rarity of what's available makes it a good thing to consider.
Yeah. Darcy, yeah, so I know you're asking about big box stores, and Heather's put a couple in there. So there's a, Walmart, Home Depot, Canadian Tire, Safeway, Save on Foods, big grocery stores. So definitely everything that you would need kind of for your everyday. There's lots of restaurants, pubs, that kind of thing as well. Starbucks, McDonald's, all of those. But you're also 20 minutes to drive into Calgary for anything and everything else as well.
And on that note, so with Heather mentioned earlier tonight about Bingham Crossing, Cochrane's not that far from that. So again, you'll be really close to like a Costco come 2026 and all of the development that will be out there as well.
It's true. Yeah. Cochrane's really close to Ghost Lake as well, a popular, recreation area. It just has a lot going for it. So
I love Cochrane.
yeah, we almost moved there. When we moved, we live in Northwest Calgary. We almost moved to Cochrane. It was a toss up between the two. So yeah, really like Cochrane. So as soon as we get the final like pricing go ahead, we are going to have an exclusive offering with this builder in terms of property management. So that's a very good question. Who's going to take care of these properties? Una, who's on the call now, she will her and her group will be able to manage these properties for us out in Cochrane, and we'll have a property management incentive. 1 to 2 years of free property management is what we are working on, hoping for the 2. And so that will also, help take a little bit off your plate for the first year or two as things are getting set up and settled. So stay tuned. As soon as we have more, we'll send it out to the whole email list. And I think we'll have access to about 14 lots for now, and possibly more coming. So yeah, that's exciting.
Awesome. Thanks so much, Erin.
You're welcome.
Absolutely, Alma. It's very quick. And I'm surprised at like how many people live in Canmore and commute, but it makes sense live in Cochrane and work in Canmore, because it's so expensive in Canmore that the commute is sort of worth it if you want that lifestyle, right? So I'm sure that'll even grow in demand. Okay, I'm going to go next. So I'm going to speak a little bit. Ben, yes, 10% would be the rate to put in your pro forma. I'm going to speak a little bit about kind of multifamily commercial real estate this evening. It's a huge topic to cover in a few minutes, but there's a few things I kind of wanted to mention. And then Danny's going to speak on a few kind of things to consider in terms of opportunities. But as many of you know, I also am the co-founder and CEO of WellShare Real Estate Investment Trust. So I love working with investors in the space, but I'm also in the space with you. And so I think that gives a good sort of lens and look at what's actually going on out there. And we're going to kind of, yeah, talk about that. So first thing, I'm sure many of you, if you're in this space at all, are very aware of the opportunity I always say, and the risk of CMHC. So CMHC insured mortgages in the multifamily space have made waves for the last several years. Going back a few years ago, CMHC introduced the MLI Select program, and it just kind of changed the game a lot. But one big proposed change, I'm not going to dive into the program because that would take me an hour to cover, but people like the program because of the favorable loan to value ratios that CMHC will use. They will go up to 95% of value, not of purchase price. Those are not the same thing, of loan to value. They'll also allow a much longer amortization period of up to 50 years. And so those two points are critical when it comes to cash flow. And even if you just get the 40-year, for example, that's still an extra 10 years than you would normally get on a residential investment property. And then the third one that has been attractive for a lot of people in the last few years is interest rates. So the CMHC insured mortgages are driven by the bond market. So your interest rate is determined by bond rates. And if you look up the 5-year yield, it is the graph, it is volatile in the last few years, but it is still significantly lower than what our interest rates are with the Bank of Canada rates. So all of those things have made people interested in this. I'm going to be very honest with you that Danny and I probably talk more people out of this than into it because it is a totally different game than the residential world. But there's one proposed change right now that is flying around, and I tried to confirm again with my brokers today if there was any new news on this. But what is a very popular strategy right now in this space is putting together individually titled properties and putting them in a block of units to then go use the CMHC insured commercial financing on. And that has been allowed. WellShare did that. We have a 16-unit townhome project in Edmonton. They're all individually titled. And so what they're suggesting is that this may not be allowable anymore. So if you are putting a bunch of properties together, townhomes, condos, whatever, and they're all individually titled, this will no longer be acceptable use for CMHC insured mortgages. So this is a massive, massive change. I think there's probably hundreds of files in with this exact plan just in our small community that I probably could find. And across the country, it's substantial. So if you are looking into this space right now, I would not be putting any offers on these types of properties until we hear about this. Because the biggest lesson I've learned with CMHC and the commercial world is when things change, they change. That's it. There is no like warning. This is gonna be happening in 6 months. It's often overnight. And with CMHC being the only insured mortgage provider in the commercial world, whatever their policies are what goes. And so this could create some opportunity as well from a kind of opportunistic standpoint for people who are able to be problem solvers and come to the table, because there is going to be situations of people, if this goes through, where they already have removed conditions. They are, waiting for that property to get built in the next year. And this was their plan. So it will change the game considerably when it comes to potential down payments they need to put down and how just the deal looks like, entirely. So stay tuned for that. If you're interested in that space or you are in that space already, or if you have an offer on something like this, make sure you're speaking with your brokers and make sure you have a backup plan. That's another huge lesson in this multifamily space, is always have a backup plan, because plan A may not always necessarily go through. So as soon as we know more on that, we will share it out. But in just thinking about the Calgary market and Edmonton, there's been so much kind of like need for density in these communities that we are, allowing increased zoning, we're allowing increased density on our lots in these cities. And as a result, developers are flocking to build six plexes, eight plexes, 10 plexes kind of on inner city lots. And this is going to be very interesting to see how this would impact those opportunities. So maybe the developers will have to go back to just individual sales. I don't know, but commonly they are individually titled, and the builder or developer does that to give them the flexibility of exiting the project. So this is going to be an interesting one. So stay tuned for that. Number two is there's a lot of volatility obviously out there in the world right now. And there has been for the last couple years, but I think right now, I don't want to get into politics, but we're all very aware what is going on in the world. And, uncertainty is a very real thing and will have some impacts. And in this space, when you're doing numbers, when you're doing your analysis, like remember to be conservative. You can have your best case scenarios, sure, but remember to can I live with my worst case scenario? What is that worst case scenario? And have several scenarios that you can review in terms of an opportunity, especially in this commercial space, because the great thing about residential is, once the deal's done, once your financing signed, the deal's done. In this world, that is not the case. And so just being conservative, having a backup plan, being open to other solutions that you may not initially have thought might be what you need to do. And then if you are someone of the opportunistic side of things, if those changes go through, there will definitely be opportunity of properties that are going to need solutions. So we'll see what that looks like when that happens. But be conservative, but also, remember to think long term. I think when there's volatility and uncertainty, all of us can be kind of guilty of, well, what's going to happen in the next 6 months or what's going to happen. And ideally, none of us are investing in real estate to think short term, unless you're doing, short term projects and that kind of thing. But most people that we work with are building a long term portfolio. They want to build financial security, build their net worth, get their money to work for them. And yes, short term volatility and things of the unknown can be concerning, but thinking long term is a good reminder of why we're actually investing in real estate. And it's ideally, I don't like to suggest we're thinking about it just short term. So just a reminder there. The types of opportunities we're seeing are, twofold really. Turnkey, we're either seeing demand from turnkey buyers who want to use the MLI Select program. They want brand new or pretty new, as a result, to take advantage of the program. And we do have opportunities for that, ranging from, the six plexes and eight plexes like we talked about, up to apartment buildings being built here in Calgary. So all of those definitely work. The BRRRR strategy on multifamily in Calgary, or Alberta, period, is really enticing, and I honestly don't think, at least in our world, it's being taken advantage of enough, because there are plenty of older properties here that are underperforming. They've been managed by the same family possibly for decades, and they're underperforming. And so underperforming in the commercial world does mean dollars. Just a quick little thing that every time you improve your net operating income by, roughly $50, that can equate to over $20,000 of value on this property. So the best part about the commercial world is that you are in control of the valuation of your property based on how well you take care of it, and how well you manage it, and how well you manage your expenses and your income. So that's what I love about it, because you can actually directly influence what your property's worth. So there are those types of properties out there. Now, they're not for the faint of heart, because there is a lot more variables and you need likely a two-step financing plan, but those are certainly out there. So either one of those are the kinds of things that we can help with. And that, no, you can amortize up to 50 years.
That was for, I think, she was asking specifically
Oh,
for secondary suites.
oh,
It's
okay.
different.
Sorry. I didn't see the first part. Um, and then the last point is to make around this MLI Select program. I find the marketing out there is extremely misleading. And often we have calls with people, Danny and I, and they're attracted to one thing in this space, and that is the 5% down payment that they see. And just want to make something very clear. In my opinion, if you're looking in the multifamily world, you should be at least looking to have 10 to 15%, even if you're using the MLI program, because that down payment is not actually a down payment. It is not fixed like it is in the residential space, where if you have a $500,000 mortgage, you calculate 20%, that's your down payment. In the commercial world, it is determined by the value of your property. And then there's a loan to value calculated. And so people think 95% loan to value means 95% loan to purchase price. And that is absolutely not the case. And how the property is valued by CMHC is very much in their control. And there's a lot of variables that they can have an opinion on. For example, vacancy rates, the expenses you might have, and all of those variables change your net operating income, which changes your valuation, which changes your loan amount, which changes your cash required to close. And so that's a big, big difference and something to be aware of. So if you're interested in the, multifamily space, I don't want to talk you out of it. I just want to like make people understand that 5% like marketing is very misleading. And you even see a lot of realtors and other groups out there using that terminology of 5% down payment. And the reality is, especially if it's new construction, you don't know what your interest rate is going to be. So closing, you don't know, how the underwriter you have with CMHC is going to look at all of these variables until you get there. And oftentimes people, especially in new construction, because it's a 12 to 18-month build, for example, they're removing conditions before they're hearing from CMHC often. So you don't know for certain until it's done, until the money's in the bank and it's done. Things can change. So that's my rant there on that side of things. Was there a question that I missed? Oh, no, that was just about secondary suites. Okay.
Yeah, I think you got everything
Oh,
that was in there.
okay. Danny is going to, I believe, chat a little bit about some opportunities we have. Um, in the multifamily space as well, we're looking outside of Calgary. We're looking in both, but particularly to make a budget stretch, you do need to consider the surrounding areas. So I think Danny's going to chat a little bit about that and some Calgary.
Hi, everyone. I'm
Thanks.
Danny. I work with the Phipps group on the commercial side. And I apologize in advance. My slides aren't as pretty as everyone else's, but yeah, if you could forward, please, Andrea, that'd be awesome. Uh, so a little bit about the multifamily market here in Calgary. Our supply is very tight. There's not much that's coming up. The builders who caught on to CMHC and the MLI program 12 to 18 months ago started building, and now all these buildings are coming on now just in time for CMHC to change the rules again and probably upset this. So like Natasha said, it'll be interesting to see what happens with once more of these start coming. Um, there's some eight plexes that we have that are 12 to 18 months out for build time. There's currently two that we have, and they're the most reasonable pricing that we've seen in pretty well ever for this type of product. So if you guys are interested, please let us know and we can get you more information and the plans and everything for those. But definitely the Calgary market is still good for hedging your money. Your cash flow might be a little bit tighter, but there's the long-term appreciation, in my opinion, is going to be good for you. So if you want to park your money in real estate there, that's a great idea. Some of our investors are branching out to the more rural towns and cities around Calgary. So we will if we can service clients that want to drive a little bit, we will do that. We might not go to Edmonton or Grand Prairie or whatever, but there's definitely some good opportunities out there when they do come up because there's high rental demands in most of these places, and there's very, very little for rent. So you can go in and turn your buildings around without even doing anything and have some good, strong cash flow. Of course, you won't have as good of appreciation in these areas, and you'll have tenant profile issues, like they won't be as good as Calgary. But if the name of your game is cash flow, then these areas can definitely be good. The one thing that is a challenge is the financing with CMHC, so they won't go to these smaller centers just because of population, and it's a risk for them. So they try to stay away. Um, yeah, I think that's pretty well all I had. I Not too much to say there, but if you guys have questions, please let us know. We'd be happy to send you some of our opportunities that we have in Calgary and even around the city. There's a few bigger buildings that are for sale right now that are turnkey, fully tenanted, that we can send out, see if the numbers make sense for you. So let us know.
Awesome.
Great. Thanks, Denny.
Yeah, no worries.
I think there was just a question just asking if we have anything in Strathmore, just maybe if you have that we have opportunities in that area. I think, yes, there are some opportunities potentially. I don't know if there's anything currently that you've
Yeah,
seen.
there's nothing at the moment for multifamily. I think Natasha said there might be something coming that she knows about, but we can definitely keep you in the loop. If you guys want to get on our list, by all means, um, we can send
Danny,
it.
why don't you put your email in the chat and maybe whoever's interested. So we have like a commercial email list that we've been sending out opportunities on. The thing about the commercial world is it's a lot more handshakes and who you know a little bit, not so much um as easy to maybe find the information. And so we've been trying to find a streamlined way to get that to you guys. And but also to like getting very clear on what you're looking for so that we know and we can also go find it. So getting a good understanding of what our budget is, what we can be approved for. The financing is another thing. Often that's a big misconception as well of like, well, they're not going to care about me. They're only going to care about the building. They will absolutely still care about you. It's just less reliant on your income like it is on the residential space, but they will still pull your credit. They will still get you to personally guarantee this mortgage. They will still very much care about your finances, and they will also want your net worth to prove what type of loan that you might qualify for. So at a minimum, they want to see a 25% net worth value at minimum to the loan amount that you're trying to get. So that can be a rough calculation in your head. What might be available to you in terms of the commercial side of financing. The other thing we're watching for too is like CMHC is these insured mortgages. The the process is long and arduous, and the getting your certificate of insurance from CMHC is just step one, and that is painful. Then you get that, then you get to get your broker shop that to different lenders, and there could be further conditions or further requirements on top of the certificate of insurance that the lender requires. And so there's a whole host of variables in that process. And in the last few years, it certainly has made the most sense for what the market has been doing. But I am curious to see as interest rates continue to come down, we might start, hopefully seeing the traditional commercial lending world might start to make a little bit of sense again. The restrictions there are your amortization is only 25 years, which is it's like half of what you can possibly get with CMHC. And with the interest rates been where they're at, it's been really challenging to make the numbers work for investors without putting a considerable amount of money down to make things make sense. So hopefully interest rates keep going in the right direction and that will start making sense again because it's the CMHC space also does come with cons, which is, like I said, they make the rules and we just agree. But also, if you take an MLI slip program, you are locked in a certain way if you are using affordability points, which if you're trying to get as close to that 95% loan to value as possible, that means you're taking that as a benefit, but you're giving CMHC something back by saying, I'm going to keep this amount of units as affordable for 10 years. And so that's a big trade-off. I mean, we can't predict what, this year's going to look like, never mind 8 years from now. So keep that in mind. Depending on your strategy and how long you intend to own these properties, that could be a pro or a con. And that's not necessarily for everyone. So that's, yeah, something to consider.
Yes, you'll definitely have it could be a turbulent ride till closing, but not to discourage anyone.
Yeah, Danny and I do a lot of uh, meetings on these things, and we love it. Like, absolutely, obviously, there's huge opportunity there, but it's just it's a big learning curve if it's new, for sure.
Mhm.
Okay. Do we have anything after that, Andrea?
No, that just if there's any additional questions, we'd be happy to answer them. And I think we're just over, so just past 7 o'clock. So we did pretty good for time.
Awesome. Is there any specific questions? What we could talk about briefly is just like a little bit of strategy if you guys want, in terms of all this information and how to apply it a little bit.
Yeah, I think that'd be great. Otherwise, I don't see any other questions. I don't think that we haven't answered. If you have any additional questions or something that we missed, feel free to put them in the chat.
All right. Okay. So, just before we wrap up, then, if there's no questions, maybe just briefly, it would be good to kind of go over a few common things we're like talking a lot about in our consultations with new clients and with existing clients, and kind of where should we go next, and does anything make sense right now, and if I do want to invest, where should I be investing? And first, I'll start with condos because condos are something that, especially out of province, people are interested in. They're a lower price point. They're kind of easy to get into, and this is the sector of the market, whether it's Calgary or any city. To be honest with you, condos, period, are the most volatile sector of the market because you have high inventory, high volume in a concentrated place. That's the entire nature of them. And so they can react, and react positively or negatively quick in the market. We've had that here happen in Calgary. We are seeing that in Toronto right now, from what I understand from all of my clients and realtor friends out there. And so you do need to be extremely strategic with condos. And right now, um, kind of the pre-construction or not is kind of where I want to go with this. So pre-construction condos in Calgary, generally speaking, right now, there's only a couple of projects really that I would recommend, and it's because they're in areas that are not going to be competing with a lot around it, for example. So if you're on the suburbs of Calgary right now, the one great thing about this city is we push projects through fast. And that's great when we have a housing shortage, but then it also is just something to be cautious of. And so on the suburbs, in Calgary, in the north and the south, you can stand on the edge of the city, and as far as you can see is land. So you know that if the demand is there, they will continue building. And what that means is not necessarily a bad thing, but if you plan to sell that in 2, 3 years, you're still going to be competing with the builder who built your property. And so I don't see the benefit of investing in a pre-construction in that scenario where you're going to wait 2, 3 years for it to be built, and likely not going to be seeing the appreciation you would if it was in an area maybe where that's not the case. So with new construction, pre-construction on condos, you need to be very strategic and thinking about what's going on around the property. There's a couple locations we do like. There's a project downtown that I am a fan of, and southwest to Calgary by Um, what's the name of that? I always forget the name of that area, Andrea.
Creek Park, is that what you
Yeah,
think
Fish
of?
Creek Park, yes. There is a development in there. And the reason I like those options, if you're looking at condos, is that there's nothing else around it being developed. And it's surrounded by already completed communities with all the amenities that you would want, with the train, with things that will benefit you right now. Um, that's not always the case in terms of strategy. And if we were going back 5 years ago, we were promoting suburban developments because there was not a lot going on, and that made sense at that time. So the biggest thing is adapting with what the market is doing. What worked 5 years ago and made sense and people did well on might not necessarily be the same thing today. So if you're looking at condos or pre-construction condos, please reach out. I think this is the sector of the market where investors are already getting kind of caught that maybe got caught up in the hype a couple of years back and are kind of seeing, how that might play out for them. So that's my take on condos. Also, assignments are extremely difficult, if not impossible, to do here in Alberta. We've tried to help a few clients with assignments, but we can't market them anywhere. We can't send them out anywhere. We can only talk about them one to one. And we can't list them on the MLS. So it's extremely difficult. And then you have to have the other party that understands assignments and will also be, okay with that as an opportunity when they could just go to the builder and get their own, property that way. So it is really challenging from an assignment perspective. Second kind of strategy or sector, we're still, as you heard tonight, we still definitely love secondary suites. Through kind of every market condition we have had in Alberta, they have performed well. The worst, the best, and everything in between. And the one thing about suburban Calgary is there's not a lot of density in many areas. And there are pockets, like I said, that we're seeing that now, but a lot of communities in Calgary don't have a lot of density. And so secondary suites are a good way to add density and also to make a property's kind of math make sense in terms of the actual analysis and cash flow that you might see. So we still definitely, if we can choose, if we can afford to get into the secondary suited space, we're always going to try to point you in that direction over condominiums, unless there's another reason we really, really want the condo. And that might be like it's for a child or something along those lines. So we still love secondary suites, duplexes, fourplexes, love them still. And you can take advantage. I saw someone post about the City of Calgary incentive program, I believe, earlier.
Yeah.
Post about that, Andrea?
Yeah, I had just mentioned in there that that is available.
So city's very much on board and they still work well. And then of course we talked a lot about the commercial side of things. So that's kind of the three buckets I would say that people are looking for from the buyer standpoint. As prices have gone up significantly in the single family home, buyers and investors have also had to maybe go from a detached home with a suite. Now they're looking at an attached home with a suite, and buyers are also having to kind of readjust maybe what they were going to be qualifying for, and maybe they're buying a townhome instead of that single family home that they would have preferred. So pricing has gone up over the years, but we're still incredibly affordable compared to the rest of Canada's major cities. It's still a major, major difference. So I know us here in Calgary, it's starting to feel expensive, but that's not the case for people coming here. It's like vastly different. So bear that in mind that there is still, runway, and by all means, in terms of the country, it doesn't necessarily feel expensive to newcomers. So that's kind of the quick of it. If there's any specific questions, we can take them. But yeah, really good to see everybody this evening.
Thank
Yeah.
you so much. I just want to say very informative, and I appreciate everyone's time and input. And so thank you.
Thanks for coming.
Thanks for joining.
Awesome. Thanks, Colleen.